Hey, this is Justin with DayTradeTheMarkets.com on Thursday, September 20th, and I wanted to do a real brief video of the first half of the emini S&P today and look at the key structure early in the day that kind of set the tone for what to expect the rest of the day, at least the way that we look at the markets. So to set the context a bit, heading into the day, we had our bigger picture bias of up, obviously, and we were looking, if you saw the video, same as yesterday, we were looking at this 1447 area to act as potential support. We wanted to see how the market would react there, and so wanted to look at what happened pretty early in the day and how that kind of set the stage as kind of the major decision point of the day. We had this box here that you can see called a high velocity move. That's telling us that there's pretty aggressive selling coming in as we're busting down through this 47 area. Okay, so we also have the expectation when we get one of these high velocity moves, and this is in our training, that the high of that should act as resistance. Okay, so all things being equal, that should act as resistance. We even have a trade, if you watched the last few videos, I've talked about this, we have a trade idea that we call the high velocity move retracement trade, which would mean that you want to be able to put the market in context first. In other words, it's not as good when you're fighting against this up bias, but the idea would be that this is a pretty good trade entry location. You can see the market sold off a point when it tested that level. But it didn't do much more than that, and then you could see that it busted back through on pretty good velocity. It busted back through this 47 area. So in other words, that showed us that the market tested this 47 area, tested below it, retested it here to see if we could use that as some resistance. It also had the added benefit of the structure of the high of this high velocity move. When that did not hold, because what happens is almost as good of a clue. What doesn't happen is as good of a clue as what does happen. And so when this 47 area didn't hold, the market came back above it. That's a pretty good indication that the auction lower failed, and we should expect a move higher, especially considering the structure that we're in a bigger picture up market. So when that happens, we certainly just want to look for opportunities to get long. Certainly getting long at this green zone with the up bias makes some pretty good sense. And obviously, the market did rally into the close for the most part. So again, just a quick video, but I wanted to talk real quickly about the idea of I guess you could say expectations versus reality. And you can see that our basic expectation is that the high of this high velocity move should act as resistance, especially when combined with this 47 area. When that didn't happen, that gave us really good evidence as to what to expect. That happened to line up very nicely with our bigger picture bias. You can see we retested the 47 area again, decelerated, and then tested these green areas. So support areas, support zones. Hopefully that makes some sense. Again, just a quick video. Wanted to talk about kind of that key moment in the day that happened early on today to give us some context. Let us know if you have any questions, and have a great Friday. Talk to you soon.